Yeah, so thanks, Chris, for that introduction. So I'm really happy to be back here in San Diego. I spoke at this meetup. It was at a different location. I think it was 4 years ago. It was ages ago. And that was when I think Bitcoin was trading maybe at $3,000. It was a long, long time ago. I think it was like 2019, 2018, before the pandemic. That 2.5 years kind of just flew off of our calendars and our radar. So very happy to be here. Yeah, Medha, Parlikar, CTO and co-founder, and we founded Casper Labs. My partners and I co-founded Casper Labs in 2018, October, Halloween. Casper, the friendly ghost. We founded the company in Wyoming on October 31st, 2018, with the express purpose to build an enterprise-grade or enterprise-friendly blockchain protocol. And so we really we set out to, build a protocol that I would use. I come from software engineering industry. I worked at mp3.com. Everybody knows mp3.com, the most spectacular failure in San Diego. 175 engineers strong, amazing technology. We had mp4.com, which was YouTube back in 1999. And we managed to screw it up with a copyright infringement lawsuit. Way to go. Yeah, did listen to the lawyers back then. Really should have listened to the lawyers. So there's a lot of MP3ers still local here. And then I went to go work at Webside Story, which is another iconic San Diego company. They were acquired by Omniture, who was ultimately acquired by Adobe for $1.8 billion in 2009. And in these companies, I was their global head of quality control, quality assurance. So I was responsible for engineering and delivery, getting products out to production and making sure they stayed up. And then I went on to work at Avalara. Avalara was a Seattle-based company, but they had a small company here in San Diego that they acquired called Taxient. And Taxient had a lot of inroads with Intuit. They did tax compliance. And so I worked with Taxient, and then ultimately Taxient was folded into Avalara proper, and then Avalara was most recently sold to Vista Equity Partners for $8 billion. And so I was one of their go-to engineering directors. I ran a lot of their operations and engineering across their compliance suite. And so when we set out to build a blockchain protocol, I built one that I would use, that I would deploy in my production systems, that I could build products around, that I could upgrade, that I could integrate, that I could rapidly iterate and deliver against. And if you look at a lot of the blockchain protocols in the space now, when you actually try to work with them, it's very challenging. And the Ethereum ecosystem has done a tremendous job of building layers upon layers and layers of infrastructure, and they call it ecosystem, but infrastructure to make it easier to develop on these blockchain protocols, right? But we feel that a lot of that you don't need all that extra overhead. You should just be able to work with the protocol directly, right, in a seamless way. So Casper Labs is a company that was founded expressly to work with enterprises, right? And so, this is one of the decks that I share at a lot of the talks that I do for industry. And so we're going to debunk a popular myth that I don't think needs debunking here, and that is crypto and blockchain are not the same thing, right? And so a lot of my presentation today is really going to be talking about what is the perception of crypto in industry. When you go and talk to Fortune 500s and Fortune 1000 companies, what are they thinking outside of our crypto bubble about this technology? And we're finding that a lot of global executives believe it's the same thing, right? And we have spent a lot of time and energy separating the technology from the application of the technology, which is crypto, right? And crypto is really challenging right now. Businesses really don't want to adopt it because all they think about is FTX, Luna, and the regulatory challenges surrounding cryptocurrency. And so what Casper Labs has really had to do is say, okay, we're not a crypto company, right? You don't have to worry about SEC coming after you if you're working with us or if you deploy blockchain because there's no crypto involved. And it's an additional challenge because we also provide software updates for the public Casper network. And that's what Casper Labs' contribution is to the Casper protocol. We contribute software updates. We listen to enterprises, we listen to businesses, and we implement those requests that they have for the core protocol into the software, and then we propose those upgrades to the community in hopes that they will accept it. So juxtaposing crypto having all of these regulatory challenges with the blockchain, the underlying technology itself, there's a massive opportunity, right? And we always had the thesis that enterprises were really going to be leading the way for mass adoption. If you talk in crypto circles, everybody's talking about the mass adoption of blockchain technology. How are we going to get mass adoption? How is everybody going to have a MetaMask wallet? I actually think that people ultimately are not going to have MetaMask wallets. There's mass adoption of this notion of all of this complexity that is like in the user's face is not going to fly, right? Like, I think about mass adoption is when my mother feels like she can use email, and it's hard for my mother to use email, you know, like just email, right? But you think about, I think about my husband using a crypto wallet. Not going to happen. He's never going to. I love you, honey. He's never going to use a crypto wallet. He's like, you just take care of it, babe. I can't deal with any of that. I don't know what that stuff is, right? And so, you know, abstracting all of that away and really trying to uplift the benefits of blockchain, which is sovereign identity, sovereign reputation systems, provenance, trust. These are things that we believe you can expose the value to the consumer, right? Even if you're just using the underlying technology. And there's ways to secure that technology so you don't worry about, oh my God, it's a private blockchain. There's no security associated with blockchain. There's ways to work around that, right? So we are working to shield or enable businesses to use the technology without the regulatory fears they're dealing with the SEC and this whole crypto thing. And so, you know, there's two big sets of language here, right? So you're seeing this is the way enterprises are really thinking about this. They do believe in tokenization, right? So we're working with, I'll talk about it later, a company that is tokenizing patents. Really, really interesting stuff. And very much being received well by businesses, versus you're thinking about, you know, DeFi and yield farming and trading. Like a lot of this stuff is really loaded. They're loaded terms in the space. Web3 is a loaded term with businesses in the space right now, and we have to be very careful if we want folks to work with blockchain technology. So this is the adoption curve of internet users, you know, and you're thinking about the total crypto users. I think this number is going to go way higher than that. But it's following a very similar adoption curve. And so we can extrapolate the adoption curve for the internet, the adoption curve for cloud, and the adoption curve for blockchain are going to be very, very similar. Enterprises are going to lead the way, number one. Number two, it's going to take time, right? It's going to take at least another decade or so to really see ubiquitous adoption. I believe Moore's law is going to have a role to play. What does that mean? That means your node-to-node communication has to go way up right now, right? So that physical infrastructure, when you talk about passing messages over a decentralized peer-to-peer network, there's a lot of optimization still to be had there. That's the number one blocker in all of these proof-of-stake networks, is how quickly can messages traverse the network. The second thing that you're going to need is more silicon, so you get more throughput and computation from the nodes themselves, from the actual silicon, right? And so I feel like there's a lot of research and emphasis being placed on consensus protocols in this space, but really we need the physical infrastructure to go someplace, right? We need that physical infrastructure to be optical cable, right? And that's going to take decades, right, before we can start seeing the kind of throughput that everybody wants, the kind of throughput that everybody needs in order for it to be ubiquitous, right? We were doing wireless content delivery at mp3.com in 1999, but there was no 5G. Guess what? You can't deliver content wirelessly without high-speed bandwidth, right? It was the high-speed bandwidth that made the technology accessible. The technology was there. You know, the technology to stream video and content was there in 1999. We built it. We built it in San Diego. Nobody could use it because there was no Wi-Fi. There was no high-speed networking. There was no high-speed, you know, cable even at home. So, okay, so I could download a song in, you know, 15 seconds from MP3 servers. Doesn't mean that somebody could do it at home over dial-up, right? So that's what really needs to happen to transform the performance of these networks. So let's talk a little bit about use cases, because, you know, oftentimes you feel like you hear that, oh, blockchain's a, you know, a hammer looking for a nail, right? It's very expensive infrastructure. It's expensive computation. But we are seeing a lot of use cases around, you know, single sign-on self-sovereign IDs. We're seeing a lot of use cases around supply chain, particularly cold transport. So you think about, like the COVID vaccines had to be transported at a specific temperature. And so there's a big interest in using IoT sensors to actually track the efficacy of the shipping containers, like that the product within the container is not exceeding a certain threshold of temperature while it's in transport. And then what do you get from that? From a healthcare perspective, you get better efficacy for patients. You're not administering a spoiled product to patients, right? So even if you do the cold chain transport, you still don't have a guarantee that during transport, the entire time it didn't exceed a certain inner core temperature, right? And so this is something where you can get guarantees, not just of provenance, which is the source of the good, but really how it was transported en route, right? And the Casper protocol has some very unique capabilities within it that make supply chain an interesting use case for us. And then, of course, finance, tokenization, clearance, settlements, and know your customer, or KYC, right? There's a lot of KYC systems out there that are running on blockchains, both Hyperledger blockchains as well as Casper blockchains. And so really three super interesting classes of use cases. What do you say that they're use cases, right? And so, yeah, like businesses, constantly face this creativity push, right? They're always having to adjust to what's coming forward. It could be governmental regulation. It could be new features. It's competitive advantage. It could be the intersection of all three. And so what you're looking for in a protocol, I believe, a lot of these public protocols have this notion of like immutability. So what does immutability mean? Immutability means that once I put something in the blockchain, it can never be changed. And I think that's absolutely perfect when you're talking about Bitcoin transactions. Bitcoin, I put a transaction on the blockchain, it should never be reverted. Alice sends Bob one Bitcoin, that's it. It's Bob's Bitcoin, it never gets reverted. But what happens with a smart contract? How many of you have written an application and you got it right the very first time you wrote it? Never had to change it again, ever. Like, there were no bugs, it worked exactly the way you wanted it, you never had to change it after that. Yeah, the answer is absolutely zero, like never happens, right? And so on Ethereum and a lot of the other protocols, all the EVM chains especially, they have to use a proxy model, which basically says, well, behind door number one is a contract. Today it's contract version number one, but I decided to upgrade it, so now behind door number one there's a different contract, it's version number two. But observing that when you're doing things like composing contracts and you're using the Ethereum blockchain to create this building block, right? Or this, you're using different contracts on the Ethereum blockchain through something called composability. Just like we compose software out of libraries, you can use small contracts on Ethereum like libraries, and you can call multiple contracts, but you have no visibility into if that contract has been changed. If the method signatures and the APIs for that contract haven't changed, you have no way of knowing if it actually is the same contract, because the protocol doesn't do anything to tell you that the contract is different, right? Because you're calling the proxy. You're not calling the contract directly. So what you see is the proxy routes your message to the contract could have changed. And so this is a problem that I feel that the protocol needs to solve for and provide transparency and clarity and the same mechanics that we're used to as engineers today, which is if I'm going to import a version of a library, I know the version of the library, it has semantic versioning, and if I want to use version 1.0, I use version 1.0. If there's a new version, I can choose when I want to use version 1.1. As a software developer, I should be entitled to do that. I should be able to say which version of the library I want to include in my application. And that's something that Casper does natively. It enforces a protocol version and a contract version on the chain. So you don't get to cheat. And this is one of the core capabilities of Casper. So our value proposition, we have the core Casper technology, a technology that's built for businesses from the ground up, using WebAssembly and a lot of features with a very complex permissioning scheme, in addition to the features that I just described, like upgradable smart contracts. And then Casper Labs is like the Red Hat for Linux. We're here to help customers use blockchain. What are the use cases you're looking to adopt? Do you need help with smart contracts? We nurture the Casper ecosystem. We provide support to ecosystemic projects. That's our role in the Casper protocol. We're also finding that businesses love hybrid blockchains. Remember I talked about having a private blockchain that has the security of a public one? So you probably see this in Ethereum as well, that there's a lot of what we call layer 2s. Polygon does this. Polygon is a public layer 2 for Ethereum. Polygon doesn't really have a very strong consensus protocol. It gets its security from Ethereum. And it does this by something I like to refer to as checkpointing. And so we can checkpoint Casper blockchains as well. You can run a private instance that is completely wholly controlled, but we recommend that you run a hybrid instance so that your private blockchain can be provably immutable. And you can provably make it immutable by just phoning home. You just phone Casper. And you send your block hashes to Casper, and Casper's like, yep, those block hashes are immutable. And then you can connect your block hash in your local network to the block hash on Casper and say, yep, my blockchain is immutable. I haven't done anything to tamper with this blockchain, even though I control the participant set. And this is a really powerful feature, and we are learning from our partners at IBM and our partners at Hybridledger Foundation that a lot of enterprises are looking at hybrid. And the funny thing is, this is what they did with cloud. So anybody who remembers VMware in the early days, it was all about VMware on-prem. Like everybody was using, oh yeah, we got our data centers, and we're gonna run VMware in our data centers, and the guys in network operations were really afraid about losing their jobs to the guys at AWS, and nobody wanted to go to the public clouds. Nobody wanted to go to AWS cloud at the time, because it was all about preserving that capability of running your own machines in your data center. But then they started doing something really interesting. They were running VMware locally, but then they realized that when they had a capacity overflow, they had to go to public cloud. They had to overflow to a public cloud, and that was the first thing they did, is they started using Kubernetes, they started using AWS. So, okay, we can start log shipping to AWS. And they started having these hybrid implementations where for some of their less critical stuff that they didn't worry about, we'll send that to AWS. And then pretty soon there was a full-bore migration for all of their core systems to AWS because they realized it was cheaper, it scaled better, it provided better guarantees. We suspect that the adoption curve is going to be very similar here. That with newer technologies to provide privacy that you need, or the ability to provide multi-party computation that allows you to shard information that goes in the blockchain, or homomorphic encryption. We're going to hear from a cryptographer later today that there's going to be ways to leverage the security and guarantees of public infrastructure, even for private companies and financial institutions. But it's going to take time. And we're finding that this is playing out in the market, right? We did a survey of a lot of executives, and they are much, much more interested in a hybrid system where they have some control and they can get the guarantees of a public network without having to go all in on a public network. So we're going to talk about a hybrid deployment. IPW is a hybrid deployment with Hyperledger Fabric and Casper. And IPW is tokenizing 25 million patents on the Casper protocol. And so if you think about the problem around intellectual property, is that there is very little provenance. Once the USPTO issues a patent, okay, at that point in time, for that instant, you know that that is the patent owner. But if the patent owner sells, leases, or otherwise distributes their patent, the provenance and the tracking of all that information is next to impossible. It's literally up to you as the patent holder to keep track of that, nor is your patent discoverable. So nobody knows who they can contact to see who the owner of the patent is. You can't get a valuation for your patents. There's no marketplace where you can connect with people that want to buy your patents. And so IPW actually built a system that uses AI, has created a marketplace, and has a repository of 25 million patents that they're going to now tokenize and make available with licensing, buy and sell, and valuation. Right? So this is a great example of where you're using the blockchain to secure the intellectual property, which is a very high value asset. You can buy, sell, and trade. And then within their system, you buy, sell, and trade using Hyperledger, and then you securitize the actual underlying asset on a public blockchain like Casper, because it is very high value. So you can also use hybrid public-privates for liquidity exchanges. So we're seeing atomic swaps, and we're seeing bridges across public and private networks to get those kinds of liquidity that you're looking for, right? So I see a future where banks may be using Hyperledger for their tokenized assets, but then they're bridging those assets over to stable coins in Casper, right? So imagine if a bank wants to get liquidity and they're actually using a blockchain to track their assets, you actually wouldn't see the problems you saw with Silicon Valley Bank. Like, those wouldn't have happened. The reason they happen is because they don't have real-time visibility into their balance sheets. And so using smart contracts and using a blockchain, you can actually get that real-time visibility into your balance sheet so that you don't have a liquidity crisis like they did. You know, the quintessential run on the banks. And that's it. We talked a little bit about use cases. We talked about hybrid. We talked about the tech. So I can take some questions. If anybody wants to ask me anything, you can ask me anything. Questions? Yes.
Question. Oh, hold on. Here we go. I went too far.
Hi, thank you. Yeah, well done. So the first is the difference between Casper and Hybridledger, and is the Hybridledger Fabric in the, do you know which one is it?
Hyperledger Fabric. I mean, Hyperledger's got a lot of products in its suite. Hyperledger Fabric is like the blockchain, right? So, you know, Hyperledger Indy is identity. Hyperledger Fabric is the base blockchain layer. Hyperledger Cacti is the integration, the system that actually integrates other protocols and systems into a Hyperledger ecosystem. So Hyperledger Fabric is a blockchain. There's differences in the consensus layer, the way transactions are gossiped. There's also differences in the fact that Hyperledger is purely a private blockchain. So Hyperledger has no public deployment. There's no way to take a Hyperledger deployment and make it into a public deployment. You can't do that. It doesn't have a truly like hardened consensus protocol such that it can withstand the really harsh environment that a public network undergoes, if that makes sense. So when we talk about public networks, how many of you understand like, you know, the different flavors of public networks, right? So you've got open permissioned networks, which is Hedera. And what does that mean? It's like if you want to be a participant in Hedera, you have to join the Hedera Council. You got to be somebody to join Hedera. You have delegated proof of stake like EOS, where you're voted into the validator set. They have 21 validators in EOS. You're voted into that's delegated proof of stake. That is where the community votes you in to be a validator. And then you have open permissionless public networks. That is Ethereum, Bitcoin, Casper, Near. I'm not going to say Solana, but the other ones, right? Where you have a group of participants. Anybody can come and go from the network. That is permissionless. If I can come and go from the network without asking anybody, that's permissionless, right? If it's decentralized, that means it's anywhere in the world, right? So it's not like me and my 5 friends. Anybody can join, right? And there's a capability for anybody to come and go. So that is not possible in Hyperledger. In Hyperledger, you wholly control the nodes. You wholly control the computers, the participants in the network. And it's more a distributed ledger than it is actually a blockchain protocol. It's not a blockchain protocol per se. It's a distributed ledger. And there are differences in the way transactions are sent, the way they're finalized, the mechanics of it, right? It's a lot easier to do things to a Hyperledger. It's a lot more like controllable. Like even with a Casper protocol, if you're running the Casper protocol in a private network, it is possible for you to do what we call an emergency upgrade to change the global state of the network, but it is not trivial. It's very difficult, right? It's challenging. It's an engineering effort. So Casper, the history is basically immutable. So that's what a big differentiator between Hyperledger and Casper. Yeah. It's a long-winded answer. Yeah. I think that mic's, is it on? Okay.
So in that slide you had up with the differences between the cryptocurrency ecosystem or whatever and the enterprise one, a lot of the items, oh, thank you.
Yeah.
On the world of blockchain side, only one of these seems to have to do with value, which is the tokenization. And in your experience with talking with customers, how much interest has been expressed in, I'll just say, the concept of moving value around, either within the enterprise or between enterprises or them and their customers? And if does Casper support that? And if not, do they provide facilities where they would have hooks into existing cryptocurrency blockchains to do that through the Casper ecosystem to abstract it away from the enterprise?
Yeah, so absolutely, enterprises are very interested. Like, you know, we talk about tokenization. This isn't just ERC type tokens, right? This is really like, we're talking about NFTs as well, right? So the patent NFTs, right? And the patent NFTs are ascribed some value in fiat. You have to bear in mind, though, like the ERC20 tokenization model carries the bane of the SEC, so there's a lot of fear around that, right? But what you can do is, like we have an atomic swap with Hyperledger that's very interesting for banks to say, okay, I've got this asset that's a bond, it's an asset-backed security, I already know it's a security, I've registered with the SEC that it's a security, and now I want to express that security using a public blockchain. There is such a thing as a securitized token offering. There is a way to tokenize securities. They would just do it in that way. So absolutely, there is interest in that. They are just a little reticent with the public protocols because there's other things that happen with public protocols, right? The community dynamic is a wild card, right? The fact that it's a shared resource also makes it a bit of a wild card. Well, you know, Terra Luna happened on Ethereum, right? Terra Luna collapsed, but the whole thing happened, I think it happened, maybe it happened on Terra blockchain. But there have been a lot of hacks on Ethereum, not Ethereum's fault, these are protocols that are on chain, but some of that tends to blow back on the base protocol. And so there is some concern in enterprises around using public blockchains for those reasons, if that makes sense. More questions? Yeah.
Could you please explain a little bit about, like, if you can, how legally binding is this use case about the patents, tokenizing patents? I'm just trying to understand, like, is it really backed, you know, by some, you know, document that describes that I have a patent? So, I mean,
Yes.
it's still hard to imagine a situation where I go to a court and I show them some, like, NFT in the wallet, which is a patent. Like, how do you connect this, like, the technology level with the legal part? I understand that you're not dealing with legal yourself as a company, but
Correct.
since you have this experience with this particular use case, I'm just trying to understand it.
Yeah, so the source of the patent data is coming from Clarivate. And Clarivate is a very large company that this is what they do. So they already have recognized, they are recognized in industry as to be an authority on the provenance of patent data. So they have this patent data that streams in. The purchasing, the buying and selling of a patent between two parties that happens on Hyperledger, that contract negotiation goes through a traditional legal format. Like it happens, there's a traditional buy and sell agreement between the two parties when a patent goes from A to B, right? Now, why is the blockchain interesting? Well, any adjudication around the patent, any legal findings around the patent, any legal history around the patent, that can all be recorded to the blockchain. So it's not just the patent itself. One of the things that Casper allows you to do is write mutable metadata to the blockchain. So you can actually write this whole data structure, but the mutable metadata is in the patent NFT itself. So the NFTs are semi-immutable, right? So you can have the NFT, which is immutable, but then it has this blob of data attached to it, which is the history of everything that has happened to that patent since it was pushed onto the chain. So that's where the value comes in, and the contracts themselves are bound legally, and they would be adjudicated in court separately.
So it's like tokenizing the content of the contract to a certain extent. Yeah?
Correct, yeah. I mean, the blockchain is really good about saying this happened at this time, and you can view the history of a thing.
I suppose my question would piggyback on his, thanks. My question would piggyback on his in that I'm a real estate broker, completely different field, but you know, it seems like there's a lot of talk about NFTs and whatnot for contracts in real estate. No one I know is using anything like that. So I'm just wondering if it would be the same as a patent, or if you know how Casper would be supporting that.
It actually,
You know, through title, yes.
it's actually a fantastic use case, and there are countries like in Abu Dhabi and Dubai where they are actually the registry of land. We actually met with the registry of land in Dubai. The registry of land is actually wanting to use Hyperledger. They're using Hyperledger. Hyperledger's got a great footprint in the space for that. They're using that to actually track land, deed, and title, right? Because there's a lot of title theft right here. A lot of title theft, yes. And so a blockchain is a perfect use case for that because nobody can steal the provenance because it's written in, it's an immutable record on the chain, right? So yes, eventually NFTs should be used. It doesn't really matter what it is, but you will have this notion of this is a parcel number. It is an immutable record, and attached to it, there's a whole bunch of history with it, right? It makes sense. And you can secure that on a public protocol and make it immutable, so it's very, very tamper resistant.
Okay, so knowing that you guys are like basically publicly permissionless a blockchain, so in terms of like privacy, do you guys use maybe like zero knowledge for having data on chain, or how would you, and also that's kind of like one of the questions. The second one, maybe you can also answer possibly. It would be like, what is this especially like if we have data pushed on chain, and there's also that obvious security or privacy reasons, then is there like the speed and efficiency and so on, like all of that also related to the question, if you can address it?
So yes, I mean, Casper's Turing complete, right? So Casper's Turing complete, so you can support zero knowledge proofs on Casper. There's already a ZK implementation in Rust for the Casper protocol that anybody could use today. You can also do a multi-party computation where you shard it, right? You basically shard the information and you reassemble it off-chain. So you can also have Merkle proofs or proofs around sharded information. So homomorphic encryption is also something that you can do to shield certain pieces of information. You can also do something very simple as a hash. You can store the data in a separate instance elsewhere off-chain, and then you can store a hash on-chain to prove the provenance of the data. There's a lot of different things you can do. It really depends on what it is you're trying to do. Are you trying to do everything on-chain and you don't want to have any infrastructure running in the cloud or any Web 2 instances because you want to put everything on-chain completely and be totally self-sovereign? Or are you saying, no, we need to hold some of our data privately, and we're fine to securitize that privately, but we want guarantees around it being tamper-proof, right? We care more about the provenance and copy protection.
Got it. And then, okay, so in terms of like actually having data on chain, like just say not a lot, but a lot, like considerable amount, how about the speed and like in terms of transaction processing and so on?
Yes, so the transaction, it's interesting with Casper. So the throughput per block is pretty respectable, but the block times are slow. So block times on Casper are 32 seconds right now. We're going to be reducing the block times to 16 seconds. Now this is for the public network. If you run a private permission network or a hybrid network, those block times can come down significantly because the validator set is compressed, right? You go from 100 validators and 200 plus participants down to 5, 7, or 11, and the block times can go up quite a bit because there's a lot of consensus overhead in our current consensus protocol. In our next release, we're going to be dramatically reducing the overhead associated with consensus down to it being linear. Right now it's quadratic. So as the validator set increases, the consensus overhead goes way, way up. So, future work. I think I'm probably out of time. So Chris is coming up to me. There's more questions, we can talk later.
Yeah, thank you so much.
You're so welcome.
That was amazing. What a
I
great
hope everyone
presentation.
enjoyed it.